Futures are all in the green. Nasdaq's beginning to climb nicely, up 82 points as we speak. 4 minutes to the opening bell. Lou Basenese joins me this morning. Lou, do you think that the Fed actually wants a recession?
I don't think they want to admit it, but what they're doing in their policies are absolutely going to cause it. I mean, last week we were talking about that CPI number that came in, right? A little bit moderation. I agreed with you, Stu, that gave the Fed cover to slow down rates. And then yesterday, Fed Chair Bernard, who's a dove, was like, yeah, no, the moderation's nice, but we still have to be restrictive with our policy. I mean, that's like saying the economy can hold its breath underwater for a minute, and you're looking at your watch and it's 59 seconds, and let's see if it can go for another 30 seconds. Before long, the Fed's going to overshoot for sure. We're going to go into a recession. If you just look at all the data, are they data dependent or afraid of history is really my question. Well, are you afraid of repeating the 1970s? Go ahead.
Okay. My question is, if the Fed does indeed pushes into a recession, and I think you're right, they seem determined to do that, what happens to the stock market?
Well, we talked last week. I think tech is still very vulnerable if you look at the larger end of the market. Again, the Dow, the S&P 500, we haven't had a real super big drawdown like we saw in 2008. Certain areas of the market. So if you look at biotech, for instance, or small caps and micro caps, they started selling off first. They've sold off almost 70% in the biotech sector from the high in February of 19. So I think that's what you have to look for. If you're looking for something to turn around the major markets, it's not going to be the Fed, and it's not going to be this earnings season. You've really got to be opportunistic and look in those places of the market have already sold off significantly.
How's the earnings season going so far? We're not even halfway into it, but what do you see so far?
Yeah, it's really early, right? Next week is a big week, about 200 companies, including your favorite, Tesla and Mr. Musk. But the stats here, like on average over the last 4 quarters, about 70% of companies have beat earnings expectations and sales expectations. So far, again, early, it's only at about 35 to 40% right now. So it's very mixed bag. It's looking weak. Netflix surprised with subscriber growth, but really moderate revenue growth. Google slashing today, announcing 12,000 jobs, so we're looking at things that are very indicative of a recession and earnings declines, not earnings increases. And that's the key. The headline earnings growth numbers have flipped negative for Q4 and Q1 and Q2 of this year.
So what would be wrong with buying and holding to maturity a 3-month or a 6-month Treasury security and yielding, 3.5%, and with no risk and a little bit of a tax break? What's wrong with that?
There's absolutely nothing wrong with that. It just doesn't make for interesting conversation at your next dinner party. That's kind of dull and boring, but it works.
I never go to dinner parties, so it doesn't really matter. But Lou, that's good stuff. Thanks very much for being with us. Lou Basenese, we'll see you again soon. All right.
Thanks, Stu.